know that you guys do some work with the smaller to medium-sized developers, the private developers. We saw quite a bit of syndication in that space, and some of it sort of wholesale syndication or sophisticated syndication, some of it quite retail in its nature. Can you comment on that part of the funding economy and how it's held up?
Yeah, it's certainly come back in the last couple of months. Credit dried up significantly in the first 2 months of COVID. We've seen a definite rebound in syndicators, both at the SME level, but also in the middle markets. Middle markets I'd define up to about 30 mil in the market at the moment as a facility limit, given a number of larger projects have come off, would probably be in that middle market. Liquidity's gone up, pricing has probably come down by 200 points. So we're seeing an all-up IRR at the moment in the market. We would have been sitting at about a 14% all-up IRR by the time you add margin, line fee and a stab. I've seen that come down by 200 points in the last month. And I think that's largely a lot of institutional and also family offices, high net worths are flighting from cash and flighting from equities. And they're looking for stable returns, mortgage-backed first mortgage securities, especially a focus on residual stock. Pricing in that for larger facility limits from instos who have got a mandate from investors to go off and blend some pricing from them at circa 5%, pay circa 8 to 9% and end up at a blended rate of circa 7%, which is once again about 200 points off where it was even pre-COVID. So I think that's more about asset allocation and diversification of people's portfolios out of cash, which is obviously not yielding, and out of other securities, and placing it with investment managers that are extremely experienced. So we're probably seeing, in terms of debt cover, anywhere from nil at the lower end of the market and in the smaller end, so sub 10 million loans. Once you get to 10 to 20, you're looking at about 50 to 60% of debt cover approximately. But the qualifying nature of pre-sales now is more flexible. So a number of the lenders that are actively in the market who have got capital to place and are looking to place it are competing on both rate and risk, whether it be gearing or qualifying hurdles on pre-sales, a number of different things.